Hi, everyone. Hello, Money, Hugo, Brock, Ren, Kevin. How are you guys? Arena. So, starting off, Euro USD went right to the breakdown. I'm doing okay. Thanks for asking. How are you? You can see this was the breakdown, and we tagged it exactly. Really respected it. So, why is this important? It's almost more important to me that it doesn't close above it than, that's the important thing for the dollar. Now, I was looking for a little deeper in the dollar. I, I don't know. That really wasn't a debate. Just gave me a headache. So anyway, um, we held this 94 level. If you remember, 94, 93.80 was important. Maybe I was just a little too pessimistic on this correction because I thought we were going to trade 360, which, is just a jiggle from here. So it could have been enough. One test of 94, and we're on our way again. I mean, I think this is important right here regarding the dollar that we don't get closes, say, over 1760-ish, or you could even give it the 200, 1770 if you want to have some tolerance. Yeah, so I think you could sell rips and maybe back to 1730 if we get it, and risk the breakdown being negated. If it's negated, you get out of your shorts. That clear? Okay. US dollar yen hit a little dip last night right here. This was a target off this head and shoulders formation here, 105.80. So we've achieved it. I was kind of looking for maybe a pullback in here. You notice how the dollar gave back something and the yen gave back nothing. So good relative strength in US dollar yen compared to the Dixie. So we'll see. Maybe we're only going to get a pullback towards 105 again. Maybe we're just going to go. So you have to respect yen strength, with equities down. Although this is a pretty important area for S&Ps too. See this? To get a continuation move. And I thought we might get 34.50 or so, clean out the stops, and NASDAQ maybe head up to 11.8 or so up here. So I'm not sure we're done yet on this rebound. And, like Steve was talking when we came out of this formation in the S&Ps, if you didn't have a bias, you could say new highs. Greg was on yesterday, and he thinks that's possible too. Yeah, double bottom. But why can't we have like a failing rally up here and then have one more of these down to here? So 3,000, 2,900, something like that with another dollar rally. Because, I haven't really given up on the scenario in the dollar that we can make a move up towards 5.5. 97 is going to be very important should the dollar get up there. That's going to be a change of trend back to the upside in the dollar, in my view. That's going to take us above par. It's a real battleground. So I think it's going to be where we know what the dollar's going to do. I think above 97, you could probably short the board. So we'll see if that happens. The three drive formation and the wedge are still the dominating features of the dollar index to me. So it was just a matter of finding the pullback to buy. This could have been it. Talked about gold being near resistance, and on Blake's bias chart, 1900 was resistance. So check it out. I'd say that was a good call on the bias chart, wouldn't you? So if you took his Bias chart seriously, 1900. And this may be all for the metals too, before we see new lows. Same thing in silver. In fact, silver's weaker. So, very possible that this was just a corrective pattern after getting smashed, and we have another wave to the downside in precious metals. Turnaround Tuesday trade was short crude, successful. And to me, it looks like we're getting some type of bear flag between 38.50, 39.50, and a measured move is going to take us down to this line. I think is going to be a magnet. Now it's coming in down around 36. So that's still my target for this decline. Always when you have a move like this, you take half off, turn it into a riskless trade, trail your stops, at least a BE. You could even use profit stops now. I don't think we should trade above 40. So this is a bear flag. I just wanted to show the gold shares, and I'm sure they're not going to have a good day today, but they didn't do much on this rebound, right? Look at this. Here's Newmont, right? All it did was rally back to, prior support, which is new resistance, and GDX, pretty much the same thing. So I think the gold shares as well are going to get cheaper here. I don't know what to do about the S&Ps right now. So it's an IDK. I'm not sure if this was all of it up here. The readings are, pretty good mow up there at yesterday's highs up here. But to me, this is a tough trade. It wasn't as much last week when we were here and I had an edge, and the edge was here, that we were making confirmed lows, and I was looking for another low, and we did diverge while the NASDAQ, as I think it was Ari. Can't hear me, Hugo? Log out and come back in. As Amira said, calling it a W.
Or check the audio settings of Zoom. Good morning.
Yeah, thank you. Thank you, Stel. Now you can. Good, Hugo. All right, so I think that's about all I wanted to cover. You guys know that you don't have much time to act on this offer now, so you need to do it today. Who's joining? Who's becoming part of our community, saying thank you for the summit and what we do for you guys every day here for 3.5 years? Someone raising their hand while we still have the prices going? Charles, I'll cover yields. Are you a subscriber? You're thinking of it? Yeah. Okay. I know you are, Arena. It took you a little while. All right, I'd like a new member. Someone step up. Are you a subscriber, Oana, to ForexAnalytix? Just curious. Are we only going to let subscribers come to our next summit in January? Yeah. Okay. Okay. All right. Well, I'm going to bring Blake in. See what a lousy salesman I am? I just go right to the jugular. Huh?
Good morning, Dale.
All right. Blake, aren't I a real subtle sales type?
Buy it. Just buy
it. Yeah.
What are you waiting for, you sissy? Just buy it.
Yeah. Don't be so cheap. Just buy our subscription.
I actually explained during our trader summit. I mean, the platform and ForexAnalytix to be part of this community is extremely inexpensive. We try to make it for attainable for everybody. Even the light version, just to get in the door and get an app and have notifications is less than $20 a month. I mean, come on, but that's just like the initial, just trying to just to get, so you have some sort of analysis so we can help you become a better trader. And obviously even the premium version is inexpensive. So yeah, take advantage of it. I mean, it's really, really, really inexpensive.
Going away.
With the price that we have going. Okay. So anyway, what'd you say, Dale?
The special that we only have a few times a year, I think it's got a few more days to run in it.
Yeah, we extended it because of the
summit,
the event, but
yeah.
You guys have an opportunity to win 3 free months too, and then make sure you take advantage of it. So it's just about done, and you don't want it to be over and not be available. So but I've got to continue on because we've got ADP non-farm private sector jobs report coming out in just a few minutes. So just a heads up. And this is end of month, end of quarter today. Today is the last day. So expect some flows, some volatility coming through. And we should see some activity today. But let me talk a little bit about last night. So last night we had the debate, and if you watched the debate, heaven forbid you watched it like I did, excuse me, it was really painful from every point of view. I mean, I'm not going to say who I feel did better or worse, or just, it was painful and it was embarrassing.
Yeah,
it just is. It's embarrassing. But I think the takeaway here is, the main takeaway is, if you saw how the market reacted post event, see that big red bar there on the S&P?
Yeah.
The reason why the stock market went down is because it is very clear that there will not be a peaceful transition of power. Unless it's a Trump win, which I think there's still a good chance of that happening. Unless it's a Trump win, it's going to be, peaceful. Biden said if he loses, he'll accept the loss. If he wins, he'll accept the win. Trump said, we'll just have to see. So that basically means I'm contesting it. If I'm not winning, or if it shows me, if the election shows that I've lost, I'm going to contest it, because it's illegal. I mean, that's what it basically boiled down to. So what happens is what the markets doesn't want to see is they don't want to see democracy erode and lose the potential of a peaceful transition of power. And because Biden has a lead, and frankly, what I was hoping would happen, and this is what I was hoping would happen last night, for volatility reasons, I was hoping that Trump would have done a lot better than Biden, and the polls would have closed the gap a little bit. Because if they would have closed the gap a little bit, we probably would see more volatility in the markets. I would have thought, but that didn't happen. And I don't think the polls changed too much. But what was apparent is that there will not be a peaceful transition if the lead stays and Biden wins, and because that's what the polls show right now. And the markets are fearful of that, because it will be a lot of unknowns for a good month. And so you have to be really, really careful now, because if the polls continue to widen, that, you know, that is just going to signal to us that the markets are going to become, exceedingly
Blake,
bullish.
good morning. We got ADP 750 versus 650 expected.
Okay, thank you. 650, 750. Okay, so it was a better number. Thank you.
750 versus 650. Yeah.
Yeah. Okay, so it was a better number. ADP popped, excuse me, stocks popped. Dollar, yen didn't really do anything. Euro dollar didn't do anything. And so that's it. Okay, thank you, Steve. So anyway, I just wanted to give you guys my thoughts about the market reaction to equities, or to the debate last night, excuse me. And that to me is going to be the biggest risk now for the equity markets, and risk on, risk off, which obviously we care in currencies. We care about risk on, risk off, because it's just, it's what's driving the dollar right now, predominantly. So if the polls continue to have this large, wide gap between Biden and, I think it's, just roughly 8 to 10 points, depending on, what poll you're looking at. If that gap continues to stay wide, the markets are going to get a little nervous as we get closer to election, because we know it's going to be contested, and then what happens? And that peaceful transition kind of goes out the door. And I don't think the markets are going to like that. They don't, because the markets just don't like uncertainty. So anyway, so I just wanted to give you guys my thoughts. Again, it's not who won, who did well, who didn't, my favorite, the worst. I don't care. It was just the market's perception of what happened last night, and why the equity markets sold off initially. That would be my gut instinct. Would be that. Okay, let's talk about the euro and where we're currently at. So we did reject the 117.40. That was the 50% retracement here. It's also the 38% retracement here.
And pretty close to Amanda's number from yesterday.
Yeah, you got all these, and yeah, Amanda was looking at 117.40, which, we overshot a little bit just with the inverted head and shoulder pattern. A lot of previous supports through here, and I was thinking we might be able to extend to 118. I still have an order out at 117.85 for overnight. It's not getting tripped right now. I left it there just because, just in case we get some weird, price action for the end of month, end of quarter. But as you can see, 117.50 is resistance. And as long as that holds, 115 still seems very logical to me. So, whoops, that's not what I wanted. Resistance, 117.50, quite possibly 118. We got to be prepared for that. I still believe it's very bearish. We have, this is still a nice topping pattern. Any which way you slice it, you can call it a head and shoulder pattern. You can call it whatever you want to call it. It's a nice rounded top there. So still playing into that while we're below 118. No reason not to. Support at this point. I think that we'd be supported on dips to maybe these spike lows here. 116.60, 116.70. I don't think the market's going to get too far away from us today. I know it's end of month, end of quarter. We are expecting dollar strength to come through. Every bank pretty much reporting the same, but the problem is everybody knows it. So I'm not going to hang my hat on, I'm going to short the euro right now because I'm expecting it to move to 116.50 today. I'm not going to hang my hat on that right now because I think it's widely known that the equity that we are going to see some dollar selling right now. you know, so I'm not, again, I'm not going to hang my hat on it. Here's the cable.
It's pretty orderly.
Yeah, I mean, I don't know what to do here with the pound other than you know, we're at the 200-day moving average. We held it. We rallied back to 78% retracement. We held it, which is 129 and 127. So while we're in between that, I mean, you guys can do whatever you want to do. I'm not doing anything, and I'm giving you very round numbers right now because I don't think there's anything to do here. I do think it's bearish, but I don't want to really give it the bearish designation until we get back below the 200-day moving average or start, you know, the flag lower. I think while we're below this trend line, there's no reason to be bullish, but I wouldn't be surprised if we just, I wouldn't even be surprised if we broke 129 and hit 130. You know, so this 127 to 130 level, it's really not a lot to do here. Aussie, I was hoping last night, I had an order out last night before, you know, the market came to the conclusion that that we're not going to get a, you know, peaceful transition in government. The Aussie looked like we were going to, you know, we were near our highs in Asia overnight. I have orders to sell at 71.80. We just didn't get there because the markets got a little heavy following the election. So, or of the election, sorry, the debate. The 38% retracement comes in at 71.60. So that'll be resistance. Support. I mean, same crap that we talked about yesterday, be right here. So, you know, roughly 70, 80. Should we get down there? I mean, so I should write 70, 30, just in case things get a little out of control for end of month, end of quarter. But 70, 80 is, that 70, 30, you guys know, is huge. The reason why it's huge, as I pointed out last week, is that's this. Oop, not that. Dang. So I won't either. You guys know it's a major breakout point. So that's why 70-30 is a big deal. Okay. Kiwi. So the Kiwi, once again, failing at the 66 cent level. So you guys know 66 cents and 65 cents, right? I don't have to get too crazy here. But if we break 65.60, that should open the door for lower. So let's write that down. 65 cents. Oops. 65.60. That's key. We have a double top. Still bearish. Eventually, you know, making our way down to 64 cents. But this is here intraday. That's where it turns bearish. So, you know, you have to get below. It's actually 65, but you know, I think you can round it off. It's no big deal. As you guys always hear me say, technical analysis is an approximation. If it was an exact science, we'd all be a gazillionaires. It's not. It's, you know, you gotta, that's why you see, you know, I'll do, you know, oh, here's the dollar Canadian. This is like a support zone. Right? It's a support zone. It's not like, oh, when it gets to 133.35, it's going to pivot and then bounce 20 pips. And then from there, once it turns 20 pips, it'll retrace 5.3 pips. And then after 5.3 pips, it will surge another 22.64 pips higher. And then after that, it will level out. You know, technical analysis isn't like that. If it was, we'd all be rich, but it's, you know, it's approximations. We have to know where the zones are at. And, you know, that's why I don't get too carried away with, you know, specific numbers, unless I've seen a number, like a specific number hit multiple occasions, then I'll start paying it really close attention to that number. Like, oh, it was at 116.62, We hit 116.62 here on this day, and this day. Okay, now we have to pay attention to 16.62. It's a big deal. But for the most part, I try to just round everything out. Okay, dollar Canadian. Dollar Canadian, if you guys can't see it, this is a wedge, right? We keep getting up to 164.20 and we keep holding as resistance. The wedge is, roughly somewhere down here. So I would say 133.50, 133.70, 134.20, and that's really key. And we still are in a big inverted head and shoulder pattern. Okay. So as we're in a big head and shoulder pattern, or a big head and shoulder pattern that looks like this, target is still right here. 200-day moving average is right the same spot. 38% retracement comes up here. We just have to continue to stay bullish while we're above this 133.50. That's it. Dollar Mex. Consolidating above 22 right here. Let me get rid of this. Actually, there we go. 22 is going to be support. 22.65 is resistance. Same thing we wrote down yesterday, right? And it's bullish. Why is it bullish? Because we broke this, down channel that we were in for, descending channel that we were in for since the highs. Divergent relative strength, and we hit this new low. Now we're bullish, well above 22. And you could probably even give it a little bit further down to the 200-day moving average realistically, but Swissy. Oh, look. We bounced off 92. Oh, look, we rejected 93. Again, as I mentioned yesterday, probably one of the most technical currency pairs. Even though right now, I'm not excited about trading the dollar Swiss. I have no desire to trade it because I don't, as I told you guys yesterday, I don't know how to trade it. I don't know why I should be trading it. A lot of what I do is, I take a macro backdrop and then I apply technical analysis to it to find a good entry point based on my macro backdrop, And with the dollar Swiss, I don't really have one. I could argue, the Swiss franc, you should buy it when there's risk off. It's going to be more of a safe haven currency. Then I could argue that, it's more correlated with gold, and no, it's more correlated with the dollar. It's like, okay. But right now it is very technical. 92 is support. And right now 93 is resistance. It's 161% extension underside of this broken multi-year trend line. So if you guys are trading it, just trade the extremes. Okay. And it is a range right now. Dollar yen. The dollar yen, I really was hoping last night it would break out. I was really hoping we would break this 105
80-ish.
105.80, yeah, and this lower trend line. One of the things that's leading me to believe that we might do it. Well, first of all, remember it is end of month, end of quarter. That little false breakdown right there below the support. False breakdown should lead to a reversal breakout. So
it was a very nice weekly candle last week, Blake.
Yeah, and I think you can play into it, but we gotta see it. So a break above, I'm going to call it 105.85 would be bullish. And again, this is the end of quarter, so if there is dollar strength that comes through, it could very easily start here, and then you get like the domino effect, right? You get breakthrough resistance, and then next thing you know, you see dollar strength coming through the market, that type of thing. Support for now. Well, it is down at 105.10.
Here comes GDP data.
Man, are we getting this data? Did GDP come out? My goodness. What is no one cares
Simon,
about the data. I'm
insane.
telling you, no one cares about the data. I mean,
It's-
people
it's
might
not
care
out
about
yet.
farm payroll, but they don't care about this data. Like
There it is.
non-farm-
Slightly better than expected, like 0.3, whatever. Same.
All right, so the data came out. Maybe it's because I pulled it up late. It's not coming through there. So.
Minus 31.7.
Minus 31.4 versus minus 31.7 expected. So, you know, not
Okay.
crashing, just crashing.
Okay.
Yeah.
Well, it didn't move the market at all, and we have to get past the end of quarter today, and then non-farm payroll might matter on Friday, but nothing else. Obviously, I'm not even paying attention because I really don't give two craps about it right now. Okay, dollar yen. I'll write down what I wrote down yesterday, 105.15. I don't think we're getting there, but dollar index. You know, rounded bottom, inverted head and shoulder pattern, whatever. Neckline still comes in right here, which comes in at 93.50, which is a 50% retracement. But what we're holding, or I'm sorry, it's a 618. What we're holding is a 50% retracement, or, you know, you could look at it this way. We haven't even gotten to the 38% retracement. So, which comes in at, this is the whole thing, a whole move. This is at 93.60. So, I mean, given that we haven't even pulled back a 38% retracement of this whole move right here, that's kind of risky if you're, you know, short dollars right now because the pullbacks have been very shallow. Okay. I'm going to write down 93.50 as being support. We might get down to 93, just down to 93.60, but 93.50 is support. It is bullish. And resistance today is going to be probably right here because if we can break this, then that should allow for a move towards the high. So resistance at 94.20 and then 94.75. So I'll write both down. 94.20, 94.75. All right. US dollar, Norwegian krona. What a bounce. Didn't make it to where I was hoping we'd get to, which would have been down here. So now, $938, $962. Oops. Bullish. Okay, gold. Before the debate, talking to a couple guys in our chat room, we're talking about gold, and I think Didier was short in.
It's DDA. Thank you.
You had 1900
Dieter.
in the bias chart.
Dieter is short.
You ugly American.
Dieter is short, and he said that while we're below, you know, he's like, you know, Didier was like, hey, and he's in the Philippines. He was like, I'm short, you know, gold, and I'm like, well, as long as we stay below 1905, there's no real reason to be worried about it. You know, because we might have overshot the 1900 level. might have gotten up to 1905, but really below, 1900.
Great trade.
Oh, well, yeah, I mean, you just stay, you stay short while you're below these levels. So I
Yeah.
think.
And you had 1900 yesterday, so I mean,
Yeah, and you
it was a nice number.
Give it a couple of,
Oh, he's
give it
in
a couple of-
Thailand. That's even better than the Philippines.
maybe in the Philippines, Thailand or the Philippines. I can't remember. Right
He's
off
in
the top of my head.
Thailand. He just said it.
Oh, thanks, Didier.
So you could you could smoke marijuana in Thailand and not be have it be a capital offense like it is in the Philippines. I'm just
His
talking
son
about myself.
actually goes to school in California,
Wow.
or did, because of the coronavirus. I think he had to come home.
Oh,
I
God.
can't, but
Yeah.
I can't remember what was happening.
Santa Barbara. Oh, nice.
I'm here
Or-
stuck wondering how Dale knows what is a capital offense in having to do with drugs in other countries.
Well, it's part of my research. It goes into when I want to do my Walter Mitty thing about where I'm going to go for my last adventure. That's one of the qualifications of a country that I don't get executed for doing that, which they do in the Philippines. So I've X'd it out. So they get rid of that guy anyway. What can I say? I'm a
All right,
product
guys,
of
I'm
the
going to let you
60s,
take
70s.
over. I'm just going to go ahead and write 3,300 is support, 3,400 is resistance. This is bearish, actually. S&P is still in a range. And remember, if we get below 3,300, then that puts 3,200 back in play. And this is the same levels we've been dealing with. All right, guys, I'll let you go. I'm going to take.
All right,
I'll let
buddy.
you take over. See you guys.
Thanks,
Thank you,
Blake.
Blaker. Bye
Thank
bye.
you.
Hello, scoliosis.
Hello, acute scoliosis. Yeah, how's everybody doing? Okay. Okay, so the main thing yesterday was the debate, and if you ask 100 people, half are going to say, yeah, Trump won it, and the other are going to say, yeah, Biden did well. I think it's unfortunate, but we got to this point where yesterday's performance by Biden, I think a lot of people were expecting him to just not make any sense, and I think he did better than expected. And that's probably why the markets are a little bit lower now. Actually, no, they're back to flat, so forget about that. But bottom line is, the race is on. I read a couple of polls, obviously not nationwide ones, but you get the main thing is to get a sense of momentum and direction, and it looks like Biden's lead may be widening a little bit. Obviously, we cannot trust polls. We know what happened with Hillary last time. So all in all, we didn't get anything major, and there's going to be two more, isn't there? Two more debates.
Yeah.
So we're going to get
A
some
lot
more.
to look forward to.
Lots to look forward to. Yeah.
Yeah.
I didn't watch any of it, but from people that are like more neutral, the comments I saw that that it was more or less a waste of time. That's what they were commenting on.
Well, even the newscasters from CNN they got graphic. I mean, this one anchor, Dana Bash, actually used the term that it was a shitstorm. Okay, so and that's for both of them. So it was embarrassing, and you could say, and they said, whoever you think won the debate, America lost.
America lost, yeah. I think you can say that for most countries nowadays. Elections, somebody wins, but really the country loses. Nothing major on that front, although we're getting closer and closer. We're just over a month away, so it's going to heat up.
I know why Amira keeps, I could tell Amira, I know we're not supposed to talk politics, but Amira likes Trump because of his support for Israel. But that's not the only issue, okay? So you're in Israel and, you like that he moved the capital to Jerusalem and all his backing.
I'm totally all for speaking about politics, but only in what affects
The markets.
the markets. So
Yeah.
let's leave the other stuff out of it.
Guys, Amir
right.
just said Trump will have a big win. Just expressing an opinion on who's going to win. I don't think. Anyway, it doesn't matter.
All right. Anyway,
a lot of people think he's going to win. Some don't.
I
Let's see
don't
what
think it's going
happens.
to be easy to be a big win if Trump wins. As an outsider that doesn't have any stakes in the game.
Yeah.
So can he
Anyway.
win? I believe he can. Can he have
Yeah.
a big win? I believe as a bystander that, as I said, I have nothing to gain one way or another. I believe that's not likely.
Either way, it's going to be close. I think that's the only sure thing.
anyway,
so,
I'm filing.
yes.
I took an extension on my taxes last year, and I pay them on the 15th. I'm sending in $750.
Is that how much Trump paid?
Yeah. I'm
Wow.
just following the lead of our leader. So
Yeah.
that's it, 750.
Right.
Okay, that's it. I'm done.
So what else?
Soon enough, people will be complaining about even $100 because, as we've said long time ago, the argument will start being, okay, if we can create trillions and trillions out of thin air, why do we need to pay taxes at all?
Yeah, just print them.
And that's
Yeah.
going to be a big problem because
Yeah,
there is
sure
really
will
no
be.
good argument against it. You know what I mean?
Yeah.
Money printing is totally wrong, totally stupid, does huge harm over time to the economy. And most importantly, it will start raising questions like that. And once you take the wrong path and you start giving the wrong excuses to execute the wrong type of monetary policy, then it's not easy to answer these questions in a way that makes sense.
It's a great point. Thankfully, so far, Americans haven't caught on to that.
Okay. So economic data. We had a couple of things. We saw the U.S. data. Non-farm employment was better than expected, but really the main event is Friday. GDP marginally better. Same with the UK. UK GDP came in today instead of what was it, 21.7 minus negative. It came in at negative 21.5. So really, it's still it was a bad quarter, Q2, that's for sure. Slightly better than expected, but really still pretty miserable. And all comes down to what's Q3 going to look like for both the UK and the US and all the countries that are getting out of lockdown. Before they get back into lockdown, let's see.
Big recovery in metals, guys.
Today, yeah, they were
just now,
down.
the last candle. Yeah.
Yep.
We've had a very nice recovery so far, especially in silver. Admittedly so, from a technical perspective, and you know very well that there is absolutely no chance that I'm shorting them. I mean, the only position I want to have in metals is long. It doesn't mean I want to be long at any price, obviously, right? But it means that, whenever I want to have a position, it's going to be long because fundamentally speaking, I think they're headed much higher.
I agree, and I'm trading in the same way. And I still think we'll see a dollar spike. So I think we'll see a proper.
Yeah, I think exactly this, Telio. I think this rebound looks that it might be corrective. So I wouldn't be surprised to see another leg lower.
Yep, you know me, I was long from around 15 in silver. I got out average around 25. I got long again 21.85. I'm going to let them go above 25 again and wait for another dip. So I'm just playing that range. And,
the only thing that worries me, Stelio, is that a lot of people are looking for another dip. And that's the only thing that worries me, that we might not get it. You know what I mean?
I think the dip might be forced if or when we see a dollar spike. I think that's coming at some point. But yeah, it's a tough one. And metals, I must admit, have been trading quite resiliently, even though they were very overbought after that big breakout and we had the proper good correction, but they're still trading well. So, we have to give them that.
Yeah, the recovery in metals compared to what the dollar's doing is, much stronger. Euros popped a little bit, but the recent candle in the metals has been a larger magnitude.
Yeah, I think people are realizing that metals are going to do well, no matter if we get inflation or deflation. It's metals, in my opinion, gold especially, is a hedge against inflation, the old-fashioned way inflation. So changing monetary supply. So if that keeps going up exponentially, which it is, you want to hold real assets. And I was talking
it worked during deflation in the 30s. Home stake mining went up tenfold.
Yeah.
during the deflationary depression.
Yeah.
So
Gold can actually do well during deflation as well
yeah,
when there are issues and fears having to do with the financial system. So
Yeah.
gold will overperform either when we have real rates being close to zero, or even worse, even better in this case, negative as we have, or at any period, as long as there are fears that the financial system, might lose a wheel here and there. So yeah, and over time, there is no question about where it's headed. I mean, during the past 100 years, dollar has lost something like 98% of its purchasing power, and there is absolutely no reason to believe that dollar and the rest of the fiat currencies are not going to lose another 98% from where we are to another 100 years in the future. But there is no way that gold, silver, and anything that has tangible value can lose, that much of a purchasing power. I mean, the equivalent, simply because they have, they have intrinsic value.
I think you can argue that supply and demand in gold and silver are relatively constant over the years. I mean, they do have fluctuations, but they're relatively constant. So if that's constant and you change the money supply, then you have to go higher. End of story.
Exactly.
Will it take 5 years or 10 years or 3 or whatever? It doesn't matter. You're going higher. The question is, how do you want to invest or trade this? Anyway, we can talk about this for hours. One last thing I wanted to talk about was out of the UK, we had a little bit more Joe Boning. The chief economist, what's his name, Andy Haldane, he said that he does not see any of conditions that would justify taking interest rates negative. He doesn't think they've been met to take them negative. So he's a little bit of a hawk. Actually, he's a hawk. And this comes after the comments from Silvana Tenreiro, however you pronounce the name, who said that there is encouraging evidence that negative rates work.
Is there any market to short Haldane that he's going to get fired soon?
Yeah.
I want to participate in that market.
Yeah. But anyway, we're getting two-way speak on this issue, which is sensitive, and it will depend on Brexit closure for sure. You can bet that if there is a no-deal Brexit and it looks like there's no agreement, then the Bank of England is maybe, if they don't take rates negative, they're definitely going to do a lot more QE. But we wait and see on that.
I'll bet on both, Stelio. I'll bet on both.
Yeah, you could.
The chart on cable looks pretty constructive. I mean, after that pop we had Monday, to me it looks like we're just moving sideways in some type of flag formation, and 27 to 9. Look, I think we're going to see 130, 131 if we start closing back.
I'm not that convinced yet. Not that convinced yet, but I give you the point that as long as we trade above the 200 daily moving average and this horizontal support resistance area, let's call it 127 something.
Yeah.
From a risk reward perspective, it's not a bad proposition to be long.
Yeah, I was looking at the 2-hour chart and it looks like a flag.
I'll tell you what, though, in January, it's not going to be at 130. It's either going to be like 115, back to the lows, or way above.
Stelios is very right. One way or another, we should see volatility in the cable during the next few months, and it's either going to move sharply higher or sharply lower. But as he says, I find it very unlikely that it's going to be range bound by then.
Yeah.
Yep. Okay, that's it from me. So we have about 10 minutes to have a look at a few charts.
Okay, perfect. So let's jump to the charts. Okay, so we already talked about gold and silver. As I said, nice recovery. Looks like there could be one more leg lower. Crossing my fingers that how it looks on the chart is going to also happen, because especially silver, I'm really looking forward to buying it at 21. That's where I want to be invested, and I'm doing it no matter what. If we get there, I'm going to start dipping my toe in the water down there. Now, having to do with just one comment on FX before I jump to the rest, because Blake covered most of it. Watching the DXY backtest this horizontal support resistance trend line. So if you like dollar higher from a risk reward perspective, this is where you might want to buy it. Just one thing that's a little bit troubling for the bulls. We got rejected from 94.70. Now, why is 94.70 significant? For 3-4 different reasons. Reason number one, as you very well see, it's a horizontal support resistance area that has acted as such multiple times in the recent past. Second reason, it was the perfect equality target from the first leg higher, right, to the second leg higher. So, you know, that usually, I mean, perfect two legs to the upside and one corrective leg between them. Even if you want to see it from a harmonics people call this an A, B, C, D. You want to see it from an Elliott wave, A, B, C. You know, it's the same type of deal. It is a very popular corrective pattern. Okay, so there is a very good chance that we've completed that. Another reason is because that's just, you know, a breath away from a retest of this broken trend line support that, you know, if we go to it, it had a good chance of being resistance. So bottom line, you know, if I was bullish the dollar, I really wouldn't like this rejection from up there. But as I said, currently as we're retesting this, if you really want to be bullish the dollar, from a risk reward perspective, you can risk very, very little and see if we can get, you know, another squeeze out of this to the upside. Personally, you know, my long-term bias remains, of course, bearish the dollar. So I would find no reason to want to push my luck to the bullish side. So currently, the only dollar positions I still maintain is being short the USD NOK. So in essence, still short the dollar against the Norwegian kroner. Now, going back to some of your questions that had to do with things like oil, here is oil. Oil actually had a decent tumble yesterday, but to be fair, nothing to write home about. As I've said, technically speaking, I would really like if we could have one more leg to the downside before higher. That doesn't necessarily mean it's going to happen. Crude, admittedly, has been doing very, very well in spite of the dollar strengthening recently, and despite the tumble we had in stock prices. Now, speaking about stock price, okay, let me go to natural gas first since we had a question. So natural gas remains extremely volatile, had this incredible 3-day move. I mean, amazing. We went from $1.8 to $2.9 in roughly 48 hours. A little bit more than 48 hours it took for this move to unfold, which was unbelievable. Now, no surprise we got rejected from 290. 290 is a strong resistance area. You can see it here clearly. I will still have to maintain my thesis that despite being volatile and all, I do think that there is a very good chance that natural gas is going to be headed higher. If it seems to be stabilizing a little bit, I'm going to give it a stab to buy it once again. I bought it here when it broke out. That was an amazing trade. I did very well there. I didn't buy it again because it broke through this support resistance area, and I didn't like that. And I'm okay with that. I mean, I missed this rally, but at least, you know, I followed my plan. I have no problem attempting to buying it again if it gives me some right signal. I want to see it, you know, stabilize a little bit because these moves have been, you know, really violent. And definitely, if you're looking to trade it, you should adjust your position size accordingly because from what you've seen, this thing can really move. So, you know, you go with a full position in it and you see like a 10% or 15% type of day, yeah, that's going to hurt a lot. So you really don't want to do that. So I think, you know, you want to trade it, you know, you have to be very nimble and start, you know, buying a little bit at a time or selling a little bit at a time because, you know, it can really move when it wants to move. Now, let's go to the 4-hour chart and the S&P. and show you what I see here. And what I see here is this. First of all, I see we had this conversation with Grega last week. Unfortunately, I couldn't be here because we had a meeting, and I don't know what Grega said yesterday, but what I can tell you as a fact is that I see this move lower as corrective. Why? Because it was very overlapping and momentum was clearly diverging after some point. We've broken through this large pennant, question mark, right? Because if you see it in the bigger context, it does look like one. This move that we had lower, this recent move seems corrective, and in essence, I can count 1, 2, 3, wave 4 perhaps, and one more move higher, in which case I would be targeting closer to 3,400, perhaps even like 3,425. So I'm bullish stocks, as simple as that. I actually, I had this conversation with Blake just before the webinar. I actually bought a little bit of the of S&P earlier today at 33.30 as a short-term trade, and you know, if it keeps moving nicely, I'm actually gonna put a stop loss just below 3,300. So I think in the short term, stocks look constructive here. You know, don't ask about fundamental thesis. Fundamentally, stocks should be at 2,000, but that's a different story. You know, I'm looking to make money here, not make a macro thesis. At some point, as always, macro thesis is, you know, and price is gonna, you know, come in terms with reality. But until that happens, you know, who knows how long it, you know, we have to wait. Now, if you see the Nasdaq, not so different. Actually, you know, quite a divergence. I mean, Nasdaq didn't even manage to produce a lower low. I think.
Yeah, you had a double bottom. Steve, where would
did, yes.
61.8 be from the high, the move to the double bottom?
Let's see.
Because I like that 11.8 area. Okay.
11,800, more or less.
Okay, thank you.
Yeah. But if you want to look at it, Dale, from the perspective of a double bottom, that would mean that
New highs.
we should take roughly this distance
Almost
and
new
project
highs.
it there, and it's almost new highs. Yes.
Yeah.
Right?
Yep.
So, yeah, take that into account as well.
Okay. Thank you, buddy. Because I looked at charts like Amazon and stuff, and Amazon looks like it's forming a right shoulder, a big head and shoulders top, possibly in Amazon.
Could be the case, but really, for me, the technical picture here in the S&P, everything is possible, right? But I mean,
we would need a rally in Amazon
yeah,
to put in the right shoulder.
Look at this chart and please try to make try to make an argument that it's currently bearish in the short term.
I can't.
I mean, it's not easy, right? You really need to force it to see something bearish in the short term here. And you know, I have no reason to force it. As I said, I take very little risk at the moment. So I'm risking just, you know, a few handles and, you know, looking for a potential extension higher.
Yeah,
we'll see if it's a nice trade, but definitely it's a justified trade. I know exactly why I'm doing it. I know exactly what I'm risking. If it works, it works. If it doesn't work, it's okay. It's fine. I mean, part of the job, right?
Yeah, you're one of the. You'll be in Jack Schwager's next book, Unknown but Well-Liked Wizards. How about that?
I doubt it.
You know, I told Jack that those unknown wizards that he wrote about aren't going to be unknown anymore.
Yeah, that is very true. Knowing how many people will read his book, yes, absolutely. There was a question since before about USD. Do we have a guest, by the way, today?
Yes, Anas is with us. He's one of my go-to guys for the energy patch.
Okay, so having to do with USD Swiss, listen, Euro USD found support, backtesting this trend line resistance, now acting as support. Euro Swiss is still trapped in this rectangle. So as long as that's the case, USD Swiss will remain to trade in an inverted manner. Back tested this horizontal support resistance area as support, and it seems to be finding support here. So from a risk reward perspective, USD Swiss doesn't look bad as a long from here, purely from a risk reward perspective. Okay, I mean, it's at a good position where you can risk just a few pips, and why not even hope for a move towards 94 something. Personally, not looking to take a position at the moment because it can go either way. I mean, from an interpretation as well, you can make arguments for both sides. I mean, here you could make the argument that we had divergences and then we broke through this channel. But if you delete this channel and you make a channel, you know, from here to there and there, you can say, okay, we had a corrective rebound and that might be about to be over. So in any case, 91.60 to 91.80, a pivot area. So, you know, this can actually distinguish, make a difference on if you believe you're on the right side or not. As I said, from a risk reward perspective, where we currently are, longs look appealing. But if you look at what the Euro USD has been doing and finding support there, that's another argument that I wouldn't really be buying the USD Swiss here. I would be more or less in the lookout. I think there are better opportunities out there, bottom line. As I've said many times, I prefer to track many markets because this way I avoid going into trades that I'm half convinced about. You know what I mean? I'd rather just buy or sell things that I feel really good
conviction about.
Yeah. And you know, the happier you are with a setup, the higher the chances that it's going to work, because it means that you really have a strong feeling about it. I mean, when you have a lot of different factors pointing in the same direction, you feel a lot.
Yeah. Your wife's an attorney. It's like building a case with evidence.
Exactly. The
more
better
evidence,
the case you
the
can
stronger
build,
the case. Yeah.
Exactly. The higher the probability that you're going to win the case. Yeah. Same thing with trading.
And the jury is your P&L.
They're very correct. In essence, your pocket.
Yeah. Yeah. Anyway, I'm ready.
Okay,
to proceed.
more tomorrow then, since your guest is here.
Yep. Okay. All right. Well, thank you, Steve.
Thank
Anas,
you, Dale.
Good morning.
How are you, buddy?
Very well, thank you.
I'm interested in that tweet. I don't recall. Do you share screens during our interviews, or do I?
Well, today I have some slides I might share once if we get to them.
Okay.
And if
Well,
we
why don't you do that now then, just in case? So you hit the green box, share screen.
Okay. Let me start with the following. As you know, today we have two events that are important. We have the EIA inventory report that comes out at 10:30 today, Eastern time. And then since it's the end of the month, we have the 914 report, which we know about the production and what happened in July. So these are important. And why July is important? Because that's where the rebound in US production happened after the collapse in oil prices.
Have you ever seen a quieter period in the price of WTI and us? I mean, while the market risk on was blowing to the upside, it was just quietly range trading in a very tight range. It still is. It used to be affected more by risk off and risk on. And to me, it seems like crude is trading to the beat of its own drum.
Yeah,
Am I reading it correctly?
We had instances like this in the past. It just happened that this happened during major wars, so it wasn't that clear the same way we do it today. But my view on this, and I think probably listeners need to pay attention to this point because it's not common and it's not a conventional wisdom, that everything in the oil market moves in stages. There is nothing linear in the oil market.
Okay.
And therefore, within every stage, we have to operate within certain range until we move to the next stage, which means that when we talk about the elasticities, we talk about the elasticity of demand and elasticity of supply, the price elasticity of demand and the price elasticity of supply. The conventional wisdom is that this relationship is linear. While it works for me when I look at it in stages rather than linear, and it explains a lot of things in the market. But to go back for this month, we had several major events this month. And one of the major events that we had is the 60th birthday of OPEC.
Happy birthday, OPEC. And yeah, and you told me about what you found.
Yes, so we got new documents, and the new documents basically revealed some information that no one knew about before and never been mentioned in any of the history books about the oil market and OPEC. I'm going to share a screen here.
Okay, now I have to stop. So
all right,
wait for me. I'm going to stop share. I was showing your website, and now you could do it. Hit the green box.
And I hope, okay, got it.
I'm getting a comment from one of our attendees. Oil market manipulated, just like all markets, my friend. What do you say?
All right. The oil market definitely is not competitive. At least, forget about OPEC and everything else there. The amount of regulations of the energy industry itself makes it uncompetitive. So call it manipulated or any other terms, it is not competitive. Now, some regional areas, some regions, or some markets might end up competitive in some regions or in some periods. But in general, the oil industry is not competitive.
It's managed.
Managed, or in a sense, there are enough regulations to make it uncompetitive.
Okay,
so
let's get to
OPEC.
Yeah, May 2nd, 1960.
Everyone knows, and that's what's in history book, that OPEC was established by 5 countries meeting in Baghdad between the 10th and the 14th of September, 1960. But the fact is, OPEC establishment announcement was made in Tyler, Texas on May 2nd, 1960. So the announcement was made in Texas before even Baghdad or Cairo or any other Arab cities where the negotiations were taking place.
What's the significance of that?
Well, the significance of this, in my view, after reading those documents and looking back at what I learned over the years, is that it seems that OPEC founders assumed, or let me rephrase that. Juan Perez Alfonso, who is the development minister in Venezuela at that time. I think he is seriously one of the great oil men in history, and he is a philosopher at the same time. He studied the management of the Railroad Commission of Texas and how it managed production in Texas. So he came up with the idea of, okay, we have pro-rationing of production in Texas. Can we take that global? That's the basic idea. And to take it global, that means they have to talk to the oil-producing countries. The problem is, oil-producing countries at that time had no control over their resources because what we call the Seven Sisters controlled the oil resources of various countries. And the Seven Sisters reached a point in the late 50s where they were competing with each other. So there is no interest in cutting production and doing pro-rationing. So the idea was, if we take this global, then it might work, but governments have to do it. And in Texas, the government was doing it. So later on, he heard about Abdullah Turaki, who became an oil minister in Saudi Arabia later on, who is pictured in this screen here, when he announced OPEC. So this is the picture that we got That's the moment he announced OPEC in Tyler, Texas. And the idea was, we are going to establish OPEC, and they assumed that the Texas Railroad Commission will continue pro-rationing in Texas. And the commission in Texas, in Oklahoma, and other places will continue doing their role. So one of the problems that OPEC encountered over the years, and to go back to the price volatility that you mentioned earlier, one of the problems why price volatility increased during OPEC time was that the Texas Railroad Commission stopped doing its work. So it was a basic, it seemed like it was a basic assumption from OPEC founders that the United States will continue the pro-rationing, and they do it on the international level, and therefore it should work.
Okay, can you explain the pro-rationing to our viewers?
The pro-rationing basically is managing production to meet demand. So always try to reduce production to meet demand. Do not overproduce.
Okay.
That's what
or under
is.
Or under to drive up prices.
Or under, correct.
Okay.
Most of the time, their ideas was that producers and companies will always overproduce, and therefore we needed the government to do it.
Okay.
Okay.
Got
so
it.
that's number one. Number two, this is the picture of Juan Pablo Perez Alfonso. And this is the program of TIPRO that the Texas oil producers and royalty owners, one of the oldest organizations in the United States in the oil business. And this is the program, and the arrows basically point to the time of speaking, and all of them basically were prime times. So they were really given prime times at the conference to take that pro-rationing global, and Texas producers were really excited about it.
Who's the gentleman in the lower left-hand corner?
This is a man who got the award for TIPRO at that time. I think this man passed away a long time ago.
Yeah. Okay.
He's an oil man.
Okay.
But the idea here is forward 60 years. What is OPEC problem today? Shale. Why shale is a problem? Because it overproduced. Why it overproduced? Because the Texas Railroad Commission is not pro-rationing production.
Okay. So
in a sense, we are going in full cycle over 60 years to see the impact and the difference.
That's really interesting.
So that's the first.
Thanks for the history lesson.
You're welcome.
And I bet most people would not know, Anas, that OPEC was started in the U.S. and Texas. I would say 99% of the people, including me, before today, thought that it would have had its roots in the Middle East and not here in the U.S.
Absolutely.
Very interesting.
And basically, it comes from Texas in two ways. First, the idea came from the Railroad Commission of Texas. Yeah. And the second one is the announcement was made in Texas.
Okay.
What was missing from the history, too, is that after announcing it in Texas, they had a big party and they announced it in Caracas, in Venezuela. That was not mentioned in the history books of the oil industry either.
Did Venezuela have, did they know what kind of reserves they were sitting on at that time? Were they a major player at that time too?
They were a major player for a long time. They did not know, of course, they have this much, that the amount announced today, which is about 300 billion. But I have kind of a different explanation of why the Venezuelans basically been interested in the Middle Eastern countries and forming OPEC, and how why the Shah of Iran and Iraq all of a sudden they are interested in cutting production and cooperating with OPEC. I think OPEC was established. There was a common goal among all of them, but each one of them have a competing interest. So the seeds of divergence and competition was already in OPEC anyway from day one. Okay. And the reason why, because Juan Perez Alfonso, whom I have a great respect for, when he came up with his ideas, his government did not like his ideas. The politicians were very corrupt at that time. And that's why he got, well, all the time, right?
It would have been nice if politicians had gotten over corruption back in the 50s and 60s. We wouldn't be where we are today. But
Absolutely.
yeah, go ahead,
Absolutely.
buddy.
He was an honest man, and the politicians around him were very corrupt, and they did not buy his ideas. Of course, there were several coups, and he lost his position. He came into the United States after the coup, and then he came back when a new government came in, etc. It's a long story in Venezuelan politics. But the idea was, when he presented his government with the idea of OPEC, they did not like it. They ignored him until they realized that oil is cheaper in the Middle East, and companies were shifting their investment to the Middle East, and the Middle East started taking market share from Venezuela.
Right. Okay.
So they literally used him. They called on him and said, "Oh, remember your ideas, the one you told us about and this stuff? Go ahead and work on it." He believed them. He believed that they are working for the well-being of all the undeveloped oil producers, and it's for the well-being of humanity, and that's his thinking was. But those guys really were thinking about money.
Right.
So the moment he was successful in achieving his objectives, basically, they put him on the side, and they ignored him.
Was the Bush family involved in this? Texas, Bush, oil?
That was before them. That was
Okay.
before them, because we
Okay.
are talking about the 50s, 40s, and
Okay.
50s.
All
But
right.
the idea here is the interest in Venezuela was try to convince the Middle Eastern countries to impose taxes, go for 50-50 profit, etc., so the Middle Eastern oil will not be as competitive. So their idea was really kind of to nail the Middle Eastern producers, not to help them. But Alfonso Perez wanted to help, but he was used, in my view, by them to achieve this goal.
Okay. Very interesting history. What do you want to move to now? You have more of this?
Well, not in this. Basically, different topics. I'm going to switch to something else since we are on limited time here. So
Okay.
I'm going to. Okay. One of the missing topics from the discourse in energy today is this: everyone is talking about peak demand for oil. Not everyone, but some companies and some people are talking about peak demand for oil. Of course, I can prove everyone wrong. That's not the case, and I know the mistakes in their forecasts. But I'm not going to focus on that. I'm going to focus on this: that they are forgetting about the reaction of the oil-producing countries, how they are reacting to this. Because when you are telling the oil producers, "Oh, by the way, oil demand, global oil demand is going to peak in 2022 or 2025 or 2030. How do you think the investors are going to react? How do you think the oil producers are going to react? If they believe you, they are going to shy away from it. And by the time you think we are going to have peak oil, we are not going to have enough oil because there is no investment. So by telling people we are going for peak oil demand and people think oil prices will decline, we might have the biggest spike in history. So how
That's
those oil
really
producers are going to
interesting.
react? I put this behavior in 4 animal behaviors, as you see in the slide here. So
Okay.
either you behave as a lion, as a rabbit, as a tiger, or as a fox. As a lion basically is you ignore all this rhetoric and you do what you do best, just drill and produce.
Okay.
Or
Who's
a
doing
rabbit.
that? Who's doing that currently? Who are the
Well,
lions?
Historically, this happens several times, but now we are seeing less and less of it.
Okay.
And we will realize this once we get to the last one.
Okay.
The second one is rabbit. Rabbit is believe them, produce as much as you can. Literally, that will lower prices. And then just run away from oil, do something else.
Okay.
So some countries especially with lower reserves, that's what they are doing. Probably the Russians are even doing that.
Interesting.
The tiger is, okay, you are going to compete with me, and you think that oil, you don't want my oil, and oil is going to peak. Here is what I'm going to do. I'm going to crash the market. I'm going to make oil the cheapest liquid there is, and show me what we can do.
Saudi and Russia
That's what we've seen.
earlier.
So the idea
yes.
here is I'm going
Okay.
to attack, and cheap oil is going to stall all those developments that you are thinking about.
Right.
But they cannot do this often because they have a population to support. They have economic development programs to support, etc. So they can do it from time to time, but they cannot do it all the time.
Okay.
So they resorted to the fox behavior. Outfox them all. How you outfox them all? They say, okay, you are going to use electric vehicles. You are not going to use my oil. You are going to use renewable energy to produce electricity to supply that vehicle instead of gasoline and diesel. Go for it. I'm going to make sure that the body of the car is made from oil. I'm going to make sure that every part of that car is made from oil. You want to go for wind turbines? I'm going to make sure that every part or most of the parts in that wind turbine is made from oil. You want to go for solar? I'm going to make sure that everything you need to build that solar is made from oil. Oil to materials is the new approach. That's the new stuff that's coming up right now.
Okay, are there any currently?
Yes.
Any
yes,
that you mentioned
time.
that oil's a big component of?
Yes. Yeah. Well, right now, if you look at what Saudi Arabia is doing on a large scale, basically, that's part of their plan. That's part of the 2030 vision. That's part of what after 2030 vision. So the problem for me is if Saudi Arabia and other producers go for oil to material, of course, that includes petrochemicals and plastic and everything else.
Right.
Go for oil to materials. And then the European governments and other liberal governments around the world do not deliver on their renewable energy and EVs. And the electric, and people are not going to buy as many EVs as EV supporters think, then we are going to end up with a massive oil shortage.
How long would that take to develop in your mind? Is it already happening?
It's already happening, and I think probably we are talking about 10 to 15 years for this to hit really hard. But the idea here is this is not in the discussion. No one is talking about how investors and how oil-producing countries are going to react to this rhetoric of peak demand. And we need to bring whether what I mentioned was extreme or not, it has to be part of the discussion.
What a great perspective.
It impacts us oil. It impacts us all. It impacts politics and it impacts economics.
Can I ask you something, Anas?
Sure.
I did a summit over the weekend and interviewed someone whose, wheelhouse is oil, who was bearish, who's flipped to bullish. And they started talking about what was happening in certain African countries. I think Mambia, if I recall correctly. Are you seeing anything in Africa that also is part of this jigsaw puzzle?
In terms of increasing production, bringing more resources,
yeah. Like development. They're in the state. Despite everything you've said, I believe Africa, they're finding reserves and beginning to develop and produce.
We don't have even to go that far. Just to look at Guyana and Suriname, they are very close to us.
Okay.
And look at the major development they experienced in the last few years, and now they are bringing massive amount of oil. But this is not the issue.
So this could really be a windfall for Africa because they're taking the opposite tact of the lion and the rabbit and the tiger.
Yes,
they may be a fox, Africa.
Well, it's not only a fox. Basically, we have another issue here. If we want to go farther on the oil demand issue, that per capita oil consumption in those countries is just like the United States 200 years ago.
Okay.
So the story of Africa is not the supply side. The story of Africa is the demand side. And
Okay.
about over a year ago, I was in a major conference in Abu Dhabi, and one of the African ministers basically was extremely angry at some Europeans ministers, and he said, "Now you are talking about climate change after you guys used oil for 150 years, and after you enjoyed very high per capita income and enjoyed your life and all this stuff. Now you want to move to it and force me. I just started. Force me." Basically to stay where I am. It's not going to happen.
Yeah.
So
Yeah.
the bottom line is any person in Africa or any of those poorer countries in Latin America or Asia wants exactly what you and I have today. They don't want a lower living standard than the way we live today. They look at us up and they say, I want to be like that guy, and I want that car, and I want that house, and I want this in my house. Everyone wants this. So the idea is all of a sudden they are going to say, oh, for the sake of climate change, I'm going to stay in my hut.
Yeah, my hut.
And I'm not going to send my children to school.
Yeah. Not happening.
Absolutely.
Let me ask you this, Anas, to wrap it with. Oil's been under a little pressure here over the last few days. Do you have a price level on WTI that you think would be a floor for any decline in oil from, that we had from the low 40s, say 35 or 32, where you don't think the oil will give back that much? In one word, what's your floor for oil prices in your scenario?
Just a clarification before I say it. I mean, that oil could be penetrated for several hours or a couple of days, whatever the floor is. So we are not talking about like a firm floor, that's it. You cannot penetrate it.
Yeah,
but
okay, it's a mattress instead of a floor.
Correct.
It gives.
Correct.
Okay.
Correct.
All right.
38.
38? Okay. Appreciate it. And you really do believe that we could end up with a super spike in the next 5 to 10 years?
I mean, the spike is going to happen earlier than that because of various issues. I mean, let's remember, I know we are out of time, but remember that we are having a serious problem with shale today.
Yeah.
Shale is supposed to produce by next year, by the end of next year, we're supposed to reach 14 million based on the forecast. We might end up with less than 11. So we are already
because
short
they're all
about 3
going
million.
BK and capping wells?
No, basically because of lower investment versus high decline rates.
Okay. Anas, I tell you what, you're always an eye-opener. Great presentation. I really appreciate you taking time and edifying our community. And like I said yesterday, when I reached out for you, I was trying to book you for another date. I didn't know that we had one today. But I'll get a hold of you on Twitter. What's the best way for people that have an interest in this to follow you and, stay informed with your narrative in the oil market? Is it just Twitter?
I use Twitter as my school. What I mean by school is I teach others and I learned at the same time. So my handle is at Anas Alhaji, ANASALHAJJI. So it's my first name, my last name, which is the same. My website is the same, Anas Alhaji. And probably those two are the best way to contact me.
Okay, much respect to you, Anas.
Thank you.
I really appreciate you being here today. Everyone, that's a wrap. The crowd liked it, and I'll get a hold of you on Twitter, and we'll book something in December. Okay, buddy?
Thank you very much. Appreciate it.
All right, so that's a wrap, everyone. Remember, don't count your barrels, count your blessings, and have a great rest of the day trading. We'll see everyone tomorrow. Adios.